0.6. Zero point six. 0.6. Check the stats, guys. 0.6 is the right answer. So, it's normally, and that's like the data I gave to you and did the work and made it, and made this data for you. It's such a value. I don't think most of the people understand, but like it means on a Tuesday, standard deviation 0. Wait, was I Wednesday? Let me check. Wednesday, Tuesday. No, it's Tuesday IDR statistics, 0.6. I'm right. So it means in this example that the 0.5 is not the target because, over 17 years, we have 0.6. So you could say that the level of the target would be here, which would increase your R. And then you could take a partial here and you see this pattern here and you could re-enter. So because your confluence or your idea would be maybe we will reach to close the gap below us. So if you miss this trade, what is the next option? Again, I mean, just standard deviation levels. I don't know how much more value it can have, but just look at this. And it's the same situation like we had in British pound. So fair value gap. Do we want to see the price coming up here? No, we don't want to see it here anymore. So fair value gap, rejection. So this is an entry you can take again and another, or you can add a position to your pyramid. So I hope it's clear. I hope everybody understands what I'm talking about and where my logic is coming from. And like I said, you don't need to be ICT charter to see that. Like really the combination and the logic and the levels are so simple that you can combine it. But like what really not a lot, like maybe Nindo, for example, because he's already working for 6 weeks with the idea. The more you work with it, the more you see this insight. Like what I showed you in my videos is literally a simple rule to apply. But so far, I didn't even talk about what you can do with these levels. So as you can imagine, the system as it is right now, it has so much more depth. When I hear people saying on Twitter, oh yeah, this was wrong or this was right, or what I'm doing when I'm seeing both sides. You have to understand you're getting a map laid out in front of you where you can play in. You know that these levels and the midpoint are extremely important for whatever the algo wants to do. Yeah. So just based on watching what the market is doing at this level, it gives you everything. And then you just combine it. Like you can reach levels as a trader, which I think most of the people can't grasp right now. But I'm seeing it with Nindo, for example. It's just amazing. And like this is just like DR, IDR, and the combination of ICT. So there are so much more things you can use, but you will turn if you are really putting the work in and putting in the energy. You will become a trader who will like 6R. I know sounds stupid for some of you, but like literally this is nothing. This is really nothing. It is, because you just saw the trades I showed you, which are high probability trades. So there are days where you can really, really make high probability trades. And like, look at me. I didn't take any trade today. I did not. But still, I had a trade on Monday with 7R plus, which was in the ODR. I had a trade tonight in the ADR with 5R. So I'm already up take any of these trades today. And I don't have to. That's what you understand. Just because you have 3 DRs and you have fair value gaps in your chart and you have whatever, you don't need to take any trade. You take trades which are giving you a high probability. It's just so simple. People think that they need to trade, but that's not what it is. It's the only thing you need to do is waiting for a setup which fits into your wheelhouse. That's all. I mean, we can just go through other charts from today, and I'm just going today because there's so much examples over the time. I mean, look at this. I mean, yes, of course, this is not happening every day. This is not happening like every DR, and here it's wrong. But it's not about the wrong. It's about the right, you know? So taking trades where you have setups, where you have good setups, which are turning probabilities into your direction, that's what you want to look for, you know? And you don't need to put like a stop far away from it. You know, because these setups are happening with like really a scenario which you can define, where you can say, okay, if this level it's getting broken, I know that this scenario is off. So you don't need to risk 10R for a scenario. Yeah. So you're entering here and your stop is just below the DR. That's simply is as simple as that. If it's not working out, it's not working out. But like if it's working out, I mean, this is a 9R trade, and like this is not news related, right? So, and these setups are coming everywhere, all the time, non-stop. Yeah. Gold, same setup we just discussed, right? Should enter here, rejection DR levels, and so on and so on. I mean, like literally every chart gives you opportunities to work with. That's looking very boring, by the way. But still, even when I say it's boring, it's not boring. I mean, there is depend. Like you have to understand, your stop placement is a very important factor for your trades. So of course, if you look at from this perspective and you say, okay, I take this rejection from here, and I have my stop here, okay, then you need like higher targets. But if you make a logical approach, and that would be if market rejects from the higher level, yeah, so we break through and it's not able to close below, it's immediately getting taken, and then you have this candle here. This is the important candle. So we close below, immediately price takes it back. And then you see this candle rejection here. Yeah, we could go into 1 minute, but I don't do this now because you will see it there more. But this is the sign. And then this would just for me, I would think about a trade looking like this. Because if this is not holding, like we have confirmation, rejection. So if price goes below that, the scenario is over. And then like I said in the GPP and the SPX example, when price goes into these levels, I know we can go lower. So there's no need to have my stop somewhere else. Oh, and even this trade, here's a fair value. Even here, this is like 6R, just new high would be 3R. That's like, I don't even know how to describe it. If you start looking at this, and if you're really training yourself, you will find opportunities with extreme high probability and with almost like with a very high probability that you have winning trades, and your risk reward ratio will be always very good. I would not take trades where I only can see 1R. It just doesn't make sense for me. I want to have trades which have the opportunity to make me 3, 4, 5R. That's what I'm looking for. Else I don't want to trade it. I don't like it, just simply. Like this example here is also beautiful, DXY. So you have confirmation over here. then we are retracing. And see, why would I not take any long here? I mean, people saying that's hindsight, but like I'm not looking at a chart from here to here. I'm looking candle for candle, and I'm asking myself, is there something to go long? No, 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 no. There you could think about it. So we see a candle, but like it's not really strong rejection, right? And then boom. And here we are coming into the area where I say retirement setup. Confirmation long, you can enter anywhere between here and here, you can enter a long trade. Or you just wait. So after this candle, we are taking back IDR. We see another displacement. And again, we take it back. And then we have rejection. So you can enter here into this trade. And you put your stop here, or if you want to have it like, again, that's again, me, I would say, okay, I don't want to have any close below 50%, but if you're not so, it's fine. So 1.36, not the best target. So if you take the other stop, it's like that. So where's the 0.5? I don't have the right version here, but so 0.5 is exactly here. So that would be 2.2 or 2 R. So that's also, there's so much opportunities that you can take, which are just like, you don't have to take the crazy ones, but like I'm trying to give you the logic why I would place a stop below here or somewhere here. I'm trying to explain it to you why I would do that. What is my thoughts in my head why I would say I want to have to stop closer here? Because I, like in this scenario, like we have seen here, I just simply don't want the market to close below, because like it already closed below, it only tried to close below again. And then this is the point where I'm saying, if my long scenario is right, yeah, it's not allowed to close below here anymore. You know, it just, in my head, it's not. But like if you put your stop here, it's fine. You're still having a good, like, again, 6R per week brings you from 10,000 to 1 million in 81 weeks. That's less than 2 years. So technically, if you take 6R, you may have to make 1R per day. So, you know, like I'm talking about 2R like it would be something not good, but like that's wrong. Like 2R in a trade is also great, you know. But again, I'm not trying to explain you that you can make 10R with every trade. I'm trying to explain why I would put my stop there and why I see it like that and how I look at price. Like even I'm not looking and I'm saying, yeah, how easy it goes up, it's easy trade. No, I'm looking candle for candle and I'm asking myself every time I'm looking at the chart, I'm asking myself, is there something which would make me go long? And I go candle by candle. So here I would know, yes, little rejection, but that's not a rejection. I think you would agree with me, right? Then we break down, and then like here, I can make the decision. Okay, do I want to trade this confirmation long? And like this is like a perfect setup. Like we are talking close below here, 15% probability. That's what I'm thinking. Close below DR, probability below 15%. That means every entry I can get here, it means if I take 100 trades around this level, yeah, only 15 trades get stopped out. That's math, that's statistic. That's not me telling you something. That's just simple math. Yeah. And taking a trade here that's why I call it the retirement setup. It just has a high probability that this trade will be successful. That's the whole point. I don't need ICT. I don't need anything for this trade. For me, I know close below here, 15% probability. I'm happy to take this any day of the year, any day during the week, except this is high impact because then I know the probability is lower. But else, I can just play this And like if you would look into, and that's the funny part, and that's advanced again. If you look at the DR levels, they're looking nice and all of this stuff, yeah? But the more you look closer, you will find that these levels are surprisingly, like by magic, going hand in hand with other things. Like if you look closer, if you go into the higher time frames, you will figure out that these levels are not random. It's crazy. But like I need you to do the work. I need you to look, because it doesn't help you if I tell you everything. You need to figure things out by yourself. And you're already doing an amazing job. I mean, I'm honored and I'm humbled by just the reaction I see on Twitter. How much people over like 2 weeks or 3 weeks now are coming up and showing me execution charts. That's like, there is not a lot of just drawing a box into and saying, yeah, nice trade. No, I see people sending me over and over and over every day screenshots with executions. I couldn't give a fuck. I don't give a fuck if this is a demo account or a real account. Yeah. Because what is it telling me is that people get confident. And I don't care if you do a trade in a demo or you do it in a real account or somewhere else. What I see when you send me such a screenshot is just you understanding things. And I know, and that I can guarantee you, over a certain time, you will come to the point that you will trade it. It's just, I know it. I know it as I'm sitting here. People will do slow, step by step. You will take these trades. Yeah. And all those people saying on Twitter and saying, yeah, well, nice, 10R, whatever. These trades are happening every day. And I know they are happening. I'm taking them by myself. And I know the more you people look at it and study it, there will be a point when you're pulling the trigger. And that's the point where you have to reach to. Look, if you're afraid, if you don't trust the model, just do something. Do like 0.1% risk. Yeah, something which is not bothering, and start to really try things out. Go down with your risk, be chilled, and just gain confidence. And I swear to you, the longer you will do it, the more you will study it, you will turn into something which is, it's on when it comes to trading. I see. I can just say, Nindo. I look at him. This guy is a completely different beast now. He's taking trades. You can't even show them on Twitter, on YouTube, because people will think he's absolutely crazy. But there's so much probability and so much knowledge, confluence, understanding of price that it's just crazy. Yeah, like, people just look at them. But like, if you look closer, sometimes the entries I am taking, these are entries which look like almost that price is reacting to my entry points. And this is not just like the circumstance or just random. No, it's because I have such a deep understanding of where things are happening that it's just looking crazy to some of you. But trust me, you can come to this point. And it's, as much I love ICT and I respect his work, it's if you combine both things and you keep on studying both. I mean, ICT has given you so much, and ICT is the one sent him a message tomorrow, because without him, I would have never shared DR IDR. I would have not even thought about it. He was, for me, the front runner, the one who brought me to the point where I said, okay, that makes sense. Why I should not also do the same? Because he clearly is showing something which most of the people don't know. And he made a very good job in explaining it, molding it into models which are making sense. But I can explain you every single model, from fair value gap to volume imbalance, and I can explain you why they are important and why the algo is looking for them and why you see price reaction there. So without him, I would be not even sitting here and talking to him, because I would have just simply thought that's what we are not doing. Like, this knowledge is not to be shared. That's what it was for 20 years for me. So But like I also understand that like ICT concepts, you need to understand in which direction the price is moving to really get confirmation and to get confidence, and that's what DR is helping you. But like that's just the first step. That's like the baby step you're taking. If you continue studying DR, IDR, and the levels related to it, and the standard deviation, and the relation between ADR, ODR, RDR, and you keep on studying ICT, you will become beasts. It's just what it is, and I see it live. I mean, I see it live with the people I am trading. I just can say that's just what it is. I can't even stop it. It's done. I can't stop it anymore. ICT can't stop it anymore. It's all on you. It's all in your hands. Yeah. Okay. So I guess that's it for today. Maybe like 2, 3 questions, and then we're gonna call it a day. Yeah, like okay, like one of the question, guys, stop asking me if the algo will change. So just use brain, yeah. So this range is not a range I created. It's not a range ICT created. It's not a range whoever talked about the first hour of the opening. Did like nobody can claim it's his range. Yeah, it's just simply the first hour of the opening in US. So and now we are going like to change the algos. The algo you have to see the algo is a navigation system without a map inside. Yeah. It's like a blank slate. So the first hour, the algo is collecting data about orders to the left, orders to the right, see where a block, see how price is reaction to levels. And that's like based on this data in the first hour, which the algo is collecting, he's building the model for the trading day or for trading session. So they can't change the algo. Because also, like, if you look into hedge funds and bigger institutions, they are not trading overnight. They are not trading. They are, per rules, forced to do the entries. All the ETFs, all the investment funds who are making, like, all the funds we have in Europe and US, where people can buy for monthly $100, they and they get shares or they get investment fund shares. All of these group of market participants has to invest in the first hour. They're not trading overnight. They are not staying in the market. They get the money from their clients and they have to put it in. So the first hour is most probably the most important hour for everything in the world which is related to investment. So the algo can't be changed. It doesn't matter. The algo can't be changed because else where else should the algo take his parameters from? You need the big boys to come in. You need the big volume to come in. You never ask yourself why in the first hour the volume is like if you check the volume in the first hour of the trading day is as high as in the following 3-4 hours. So there is no way it can't be changed. I can tell you that. Whatever is happening, how price is reacting, but DR and IDR and all the other levels can't be changed. It's impossible from a technical standpoint. Maybe 20 years we will have super AI computer. I don't know. I can't even imagine maybe. Then maybe it's a different story. But even the modern AI systems, they need to be fed. Like all of this AI stuff we have now is writing sentences for you, writing code for you. They have to have a database which is filling them. Without the data input, these systems are nothing. You have to understand that, right? No, I can't adopt you. Except you're like 30 years old, good looking, and dark hairs, female, maybe. Joking. Okay, one more question. I'm 44. But of course, I'm looking way younger, yeah? No, I'm not Arab, I'm German. Nifty, no, guys, I can talk about Nifty because I'm sorry, I know that you can't trade everything in India, but like this is a market, I literally 20 years in the industry, I never even looked at it. So I can't help you with that. Find a way, use prop firms to trade the other instruments. I can't help you with this one. Yeah, well, like, okay, last question. What is the relation between RDR, RDR, and ODR? So I don't know. I actually thought I gave that as a kind of a homework for till we'll release the next video. But like, I mean, the relationship between them should be obvious. I mean, what have we seen today? I mean, yeah, I know we have news days, but like the model stays the same. So you need to figure that out. I can't spoon feed you everything. But yesterday it was theory expansion. So there is a relationship. And I like also when you look, where have I seen it today? Was it here? I mean, just like, I don't know if you see it, but just have a look at this. So that's the low, right? So they stay valid. Like the rule I gave to you, which is like literally where you have a lines drawn in the chart, that's where the rule is true. But these levels here, they stay valid for days, for weeks. You have to understand that IDR levels, even when the rule time is over, they are important. You will see always price reaction to it. Look at price. Where did we stop the first down? Where do we reject from? So we go one candle, immediately back up, and there we go, up again. So there's so much, but like I need you to figure it, to study it. Like I can't give you like everything, you know? That's why I said in the last video, like look at it, study it. It's so obvious. Rejection here. There's so much in there, and like if you take even then if you take advanced ICT stuff, you will find you will really feel like you're just entering the matrix and you see everything. It's just gonna make click and you're gonna see it. I can't describe it. You're just gonna sit there and you know what is the highest probability scenario happening. No, it's not support and resistance. It's just like, okay, let's say the algo is a radar system, right? And what the algo is doing, it's pinging all the time. So it's sending out bid, ask, and see what is the reaction from the other market participants. So whenever we reach a standard deviation level, whenever we reach a IDR level or a DR level or a previous one, the algo is checking his data and he sees the reaction. And based on the reaction he's getting, he's either turning around or he continues to go down. It's a constant radar system which is checking how is the order flow, how is everything working in the market right now. And these levels are the levels where the algo is saying, okay, now I'm gonna see, okay, I have this, and I'm gonna continue to buy or I'm going to continue to sell. And you see this, like every time we come to this level, we can watch it every day, real time, live, all the time. It's happening non-stop. And that's why it's not really support and resistance. Support and resistance, it's just a weird concept which is branded, in my opinion, wrong. But like you can call it like that, but it's not really what it is. Because nobody, the algo and none of the big players gives a fuck about support and resistance. They don't care about those stuff. Also not about balance and imbalance. That's all bullshit. Sorry to call it out. I mean, you see it. I mean, I gave you the I gave you the script, and you can see it every day. So if somebody believes in support and resistance, I it's okay. There are many ways to make money, but like it's not what is happening in real. That's not how it's functioning. So the algo is not saying, "Ooh, there is a big order above us. Oh no, I'm not able to go through that. Let's turn around." No, that's not what's happening. It's like simple, straightforward. Okay, not enough orders here, not enough stuff here. My collected data, I want to go down. That's like, it's just what it is. Simple. I mean, not simple technically, but like that's simplified what it is. Yeah, the problem, okay, that's a good question. So Wilson is asking if they use the same algo in crypto. So yeah, they are using the same, like almost in every market in the world. Like first, why the timings I gave to you working in every market? It's just simply because as sad it may sound, but like nothing in financial world is working without US. That's why the equity open or the open of New York Stock Exchange is important for everything, even crypto, even like foreign markets. It doesn't matter. Nothing moves without the volume of US. And let's to crypto. Crypto is actually the heaven because crypto is not regulated. So if you look at the equity market, all the computer systems and algos, what we have, a lot of strategies which are not really like helping people in terms of price were exposed, and the SEC fined Citadel. There are rogue algorithms. So companies like former employees or employers from mine, like Goldman and Citadel, they paid a lot of fines, and they have to be a little bit more careful. If we're looking at Bitcoin, there is no regulation. So literally the algos can go crazy there. They can do whatever they want. And that's why, compared to equity market, we often see sweeps to both directions. I mean, still, if I'm looking at the statistics, let me turn it on. So, I mean, we are still working inside of a quite fair statistical edge. So we're talking about 72% and 86%. So that's not including news days. So like if you take out the really important news, it will be still around 75 to 80% overall, and even a little bit higher. But like what you see in crypto is just simple. Algos do what they do, and they do the same when we have news events. They sweeping both sides. And that's just liquidity collected, and then like normally the first one is the fake, the second one is the real direction. It's as simple as that. And happening more often, or it feels like it's happening more often in crypto, just because there's no regulator telling the algos that this is not right what they are doing. So it's crypto and high frequency trading. It's like the Wild West. Like I I never met anyone more excited than high frequency trading guys talking about crypto, because literally there's no law which is telling you, no, you can't do this. You're literally allowed. This is wild, wild west. So yeah. Okay. So yeah, don't like just expect when you're trading IDR, DR levels, just expect that sweeps to the up and to the downside are happening more often. But also keep in mind, statistically, it's still around 80%. So I mean, when you're trading statistical advantage, you also have to look at it like you can't say, okay, I tried one time to trade it in the ODR or the RDR and it was wrong. That's not statistically. So you have to be a little bit different. No, I will not give any daily DRs or weekly DRs away yet, because that's NDA, and I can think about talking about it maybe in 4 months. If I want to talk about it. But like guys, I mean, I'm sorry, sounds super arrogant, but what I already gave you, I don't know. That's more than enough for a lifetime to make money. You don't need that daily, weekly, except you would be a swing trader. I don't even know why an intraday trader would ask me for a daily or weekly DR. Okay, guys. I hope you enjoyed it. Next time we maybe do it on YouTube. I don't even check, but I think the shell is bursting. I'm lucky that we can be lucky that we didn't break the Discord, I guess. Enjoy it. Have a nice evening. Bye bye, guys.